Altech Chemicals has released a final investment decision study for their HPA project. There was numerous changes in this study compared to previous guidance. However, ultimately, whilst our NPV remains similar, our valuation on a per share basis decreased to 43 cents per share. This was largely due to a significant increase in the forecasted shares on issue. The key assumptions that we explain in further detail include capital costs and project financing, the HPA price, as well as our risk weighting assumptions. Whilst we expected capital costs to increase, this did surpass our expectations. However, unfortunately, when you're the first mover in a space, such as Altech's plan to become the first commercial scale HPA operation using kaolin as the feedstock, there is no benchmark to compare capital costs. Despite this, the EPC contractor SMS Group has made a number of assurances which support the long-term outlook for the project. First, this is a final fixed price lump sum EPC contract, meaning that any overrun on costs will be covered by SMS Group and not Altech. And potentially more importantly, SMS has provided a throughput and process quality guarantee. This was unexpected and a massive vote of confidence in the project, given this is the first commercial HPA project of its type. By having these guarantees in place, as well as SMS Group supporting the recent capital raising to become one of Altech's major shareholders, this should provide comfort to the market of the project's long-term viability. To support this capital increase, the debt facility has also expanded to $185 million US, with a target date set for the export credit cover approval during December. However, despite this significant increase in the potential debt facility, we have estimated the equity component for project financing will be around 155 million Australian dollars. But as the future capital raising price remains unknown, we completed a range of different capital raising price scenarios as shown. When this raising is completed, however, the additional discount we currently apply to our valuation would also be reduced, therefore further increasing our valuation target. As previously highlighted, high purity alumina attracts a range of different prices depending on the purity of the product. We have increased our assumed price for 4N HPA to $28 per kilogram, which is lower than the current market price of up to $40 per kilogram. And with a potential long-term shortfall in supply due to a significant forecasted increase in demand, there is a strong possibility the market price will increase further in the future. However, given this uncertainty, we examined a range of different 4N HPA prices to highlight the effect on our valuation. And finally, given there is a number of hurdles to overcome before commercial nameplate production is achieved, we have included an additional risk weighting to our valuation. As these risks are eliminated, we will reduce this risk weighting, with the first being debt financing, which could potentially be eliminated before the end of the current year.